Welcome to the Transparent FX Academy. I'm Nick and I'm a top author training you with over 190k reputation points. In this video, I'll speak about USDCAD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that at the moment we have a market testing and rejecting to the upside a quite strong historical structured zone. In fact, from here, all these previous rejections to the downside were created. So when the market was testing this zone for multiple years, it kept respecting the level as resistance. Then we had this huge breakout to the upside fueled by institutional longing. And we will be speaking about institutional longing in just a few moments when we move to the commitment of traders analysis. But what we have to keep in mind here is again that we had this breakout and now the market has retraced back to the exact same level of structure. So all this previous resistance is now turned support here. We also have to notice that this is not only previous historical resistance turned support, but it is actually a confluence of support area. Because we had the impulse, now we're getting the correction, and if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse level, which shows us how we have the 0.618 and 0.786 retracements lining up exactly in this area of structure, which makes it a confluence of support zone because we have multiple layers of structure lining up in the same level of price, which increases the probabilities of seeing even more institutional longing inside of the zone, further increasing the probabilities of a potential move higher. Let's keep all of this in mind and drop it down on the weekly time frame. Now, from a weekly perspective, what we can notice is that from a structure perspective, we had the impulse, correction, new lower low. The next logical step would be to see a deeper correction for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. This gives us a first potential upside target at this area, which means that there is more room for bullish price action to be developed away from this zone. Dropping down on the daily time frame, the pattern is very, very clear. We had a huge impulse to the downside. Then the market started showing this deceleration pattern. Now, when you have a strong downtrend, you expect the market to be pushing to the downside and aggressively creating new lower lows. Essentially, what you're expecting is that every time you're seeing a correction, new strong institutional sellers are entering the market and pushing the price lower. However, if instead you see first a strong impulse to the downside and a first correction, the market tries going lower and immediately new buyers step in. The market tries going lower and immediately new buyers step in. This means that essentially sellers are losing the control of the market. This is a clear exhaustion pattern and usually the market then breaks out to the upside because at that point buyers take control. And that is exactly what the market seems to have done here. We had the impulse, then every time the market was going lower, new buyers were stepping in, candles got lower and lower, actually smaller and smaller, and at some point the market broke out to the upside. And that is exactly what I was expecting. In fact, I made a full breakdown of USDCAD just a few days ago when the market was around here, explaining all the reasons for which I was expecting this rejection to the upside. And by the way, I will link that previous analysis in the description so you can go and check it out for more free education. But that's what the market has created a move expected. What kind of structure we have? Well, before I will go into more details here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders and what institutions are doing in this market. Well, if we look at the data for the CAD, the first thing that we have to keep in mind is that if we are looking at the data for the CAD, we're actually already looking at CAD USD because all currencies on the spot are traded against the USD. So if we see here that institutions now are starting to short the CAD again, adding 4,000 shorts and decreasing the net positions from minus 67K to minus 70K, this essentially shows how institutions are now expecting USDCAD to move again to the bullish side. Because if institutions short the CAD, they are longing USDCAD. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now, back to the analysis. So in a situation like this, what kind of structure we have? Well, all this area is now previous daily resistance from which these rejections to the downside were created, which is now turned support here. Now, if the market will go and retest this previous resistance turn support, then we have an increased probability of seeing more institutional longing of USD-CAD, so institutional shorting of the CAD, further increasing the probabilities of a potential push higher. So if we will have this correction, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from the area for the market to go and retrace to that 0.32 of the Fibonacci taken on the weekly impulse. That definitely wouldn't surprise me.
Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.